How would you like to build a strong financial foundation? Who's gonna hit the next $1 million lottery in here? Hitting the lottery is different from building a solid foundation.
It's a new world. But not too long ago, it used to be that someone could work for 40 years at one good paying job and then retire for the next 20 years. Now, things seem to be reversed. You're lucky if you can find gainful employment for 20 years and then struggle to survive and retire for the next 40 years. The average person today only spends about 4.4 years at one particular job, according to the most recent employee tenure summary. But there is still a way that you can build a proper financial foundation. And that's what we want to discuss with you this evening. It's being done through a particular type of life insurance policy that we'll be talking about.
The truth is that no matter what your level of income is, you can improve your financial security. Can you believe what it takes if you want to save $1 million by the age of 65? Is there anyone in the room that's 25 years old? If so, you need to start saving $158 a month right now in order to reach $1 million by the age of 65. If you're 35 years old, you need to start saving $442 a month starting now in order to reach $1 million by the age of 65. If you're 45, you need to start saving $1,317 a month to reach $1 million. And if you're 55, start saving almost $5,000 a month. Might not be your goal to reach $1 million, but how about peace of mind? Here's the situations of most households. Living with too much debt and not enough insurance. Limited savings without a clear understanding of how much savings will be enough. What's the result of living like this? Loss of peace of mind, stress and frustration in your home, negative impact on your family. True financial independence isn't always about living in a mega mansion. It's about living within your means. Having more income coming in than going out. Protecting your loved ones from the worst case scenario. Your family and your health are more important than money. But let's get to the numbers. What's inflation? Does anyone know what the annual rate of inflation is today? Who can tell me what the annual rate of inflation is today? It's about 3.5% per year. What are the effects of taxes and inflation on your purchasing power? Here are two examples. Example 1 and example 2. Example number 1 is showing someone who's now saving $100 a month that's earning 3% interest. And example number 2 is showing the same person saving $100 a month but earning 5% interest. When you look at the example on the left, you can see that after you remove the taxes and inflation from the equation, they lose. On the right, you can see that you must get 5% or more to beat inflation and taxes. How many of us here today are now earning 5% interest? In 1978, you could buy a brand new car for less than $4,000. Today, a new car might cost $20,000. How much do you think a car can cost 10 years from now with 3% inflation increase per year? The same $20,000 car will cost over $26,000 in 10 years. How many of us are now earning at least 4% interest on your money? What's the rule of 72? If you can get a better interest rate, how long would it take for your money to double? It's the power of compound interest. This example is showing a person aged 29 with $10,000 saved, growing at different interest rates: 4%, 8%, and 12%. On the left, if you take 72 and divide it by 4, you can see that it takes 18 years for the money to double at the 4% interest rate. So, $10,000 doubles to $20,000 after 18 years, and it doubles again to $40,000 after 18 more years at age 65. But on the far right, you'll see a big difference if you're earning 12% interest. Divide 72 by 12, and you'll see that it only takes 6 years for your money to double at 12% interest. It takes 6 years instead of 18 years. So at age 29, starting with the same $10,000, it takes only 6 years for it to double to $20,000 at age 35. And then it's $40,000 6 more years after that at age 41. Going down the chart, you see the end result is $640,000 at age 65. That's a difference of $600,000. A huge difference. Who's going to hit the big lottery? Try to get 12% interest on your money. $10,000 saved and growing at 4% versus at 12% interest, the difference is $600,000. The equivalent of 20 years of work for a person working with an annual salary of $30,000 a year. Most of us don't even earn 4% interest nowadays. The wealth formula is money plus time with the rate of return minus inflation and taxes will accumulate you wealth as long as you have a high enough rate of return. Here's what a solid foundation looks like. Would you build a solid foundation from the top or from the bottom? You build it from the bottom. Just like building a house, you must build it from the ground up. You start off with life insurance at the bottom layer, an immediate financial foundation for your family's future. Add on top of that, the next layer will be to manage your debt. We're going to show you how you can pay off your house much sooner by using a life policy. You should create an emergency fund on top of that. That's money set aside that will last for 6 months to a year to cope with the emergencies. And then your investments are just gravy on the top. Now, what are your choices for building a solid foundation? Here are all the products. There is a particular type of life insurance policy called an IUL, which stands for Index Universal Life, where you can grow your money in a life policy that earns up to 17% interest with no possibility of any losses. Is this really possible? Look at all the products listed here. Can you build a foundation at the casino? Absolutely not. How about a bank where a savings account can only earn you about 1 to 2% interest at most? How about investment firms where you can lose money every time the stock market drops? Did you know you will lose money being saved in your 401k or 403b every time the stock market drops? What about the insurance industry? life, health, and long-term care insurance? We can talk about annuities too. How is it possible to earn such a high rate of interest with no losses in an IUL policy? Well, it's possible because of Section 7702 of the IRS tax code. We want to play a short video for you. It's about 5 minutes.
The Wall Street Journal called best-selling author Ed Slott the best source of IRA advice, and USA Today said it would be tough to find anyone who knows more about IRAs than CPA Slott.
Let's switch gears to another way to eliminate huge taxes: life insurance. Just so you know, I say it on every program, I do not sell life insurance. I don't sell stocks, bonds, funds, annuities. I'm a tax advisor and an educator. And as a tax advisor, I'm advising you to take advantage of the single biggest benefit in the tax code, and that is the tax exemption for life insurance. You've heard me talk about the incredible leverage and tax-free benefits of life insurance, mainly for your heirs. And that payoff is big. You turn relatively small amounts of taxable money into a tax-free windfall for your family. They'll end up with millions more than you ever had, all tax-free. It's truly the best tax leverage available under the tax code, but it's actually better than you think, especially if you're thinking, what's in it for me? Anyone thinking that? In these volatile and uncertain times, you need to focus on investments that give you control, options, flexibility, and certainty. And you want to remove both stock market risk and tax risk. And you want a guarantee. And you want it all tax-free. That's a tall order. But you can get all of that with certain kinds of permanent life insurance. Most people think of life insurance as something that pays off after you're dead. That's true. But what if I told you that you could have tax-free access to your life insurance during your lifetime, so you could use it for yourself? You could begin moving large amounts of money from taxable accounts into a tax-free permanent life insurance policy. The money grows tax-free inside the policy. It's harder than ever today to make money on your investments. So the last thing you want to do is share any of your hard-earned gains with the government. You don't have to if those gains are earned within a life insurance policy. If your money's going to grow, it may as well grow tax-free, right? Right. You need to realize that life insurance is an investment, but it's better than your typical investment accounts because it's tax-free. Oh, and one more thing. Life insurance comes with something else that you can never get from the stock market: a guarantee. But how much can you invest? Well, that's up to you and the tax rules. Believe it or not, this is an area where you might want to invest the maximum you can into the policy. If you're approaching retirement or already retired and looking to shelter more of your taxable money into a tax-free vehicle, this might be the place for you. But the mistake most people make at this stage of life is trying to pay the least for the policy. So you might be thinking, how can paying less be a mistake? Everybody wants a good deal because this is an investment, not an expense. If you were saving money in a bank account, would you want to put in the most or the least? Of course you want to put in the most because this is your savings. You should look at permanent life insurance the same way, except that the investment is tax-free. So why would you keep money growing in a taxable account when it can be transferred to a tax-free investment? If you have taxable IRA funds, you can, in effect, convert your IRA to life insurance, paying tax now at low rates on distributions from your IRA, and then using that money to fund your life insurance investment. That accomplishes two things. You reduce your future tax exposure in your IRA by taking distributions now, and you build up a tax-free source of retirement funds should you need them. If it turns out that you don't need to tap into your life insurance for retirement income, then the life insurance benefit builds for your family Also income tax-free, and for most people, it'll be estate tax-free too, depending on the estate tax exemption level. This is truly the best leverage available, and it's all under your control. Once again, I do not sell life insurance, but as a tax advisor, I gotta tell you that the tax exemption for life insurance is the single biggest benefit in the tax code.
Ed Slott does not sell life insurance. What does he have to gain by saying life insurance is such a good investment? He's a third-party, unbiased CPA. Unbiased means he must be telling the truth because he has nothing to gain. The tax exemption for life insurance is referring to Section 7702 of the IRS tax code. The government is in a lot of debt, so tax risk is an even bigger risk than stock market risk. For those who are in a 401k or IRA, the number one benefit of an IUL is that you'll be creating a tax-free environment and save huge taxes. What can you keep after taxes is the question. Tax-free, spendable money. Would you rather have tax-deferred growth or tax-free growth? The IUL can also be used for business or paying off your house sooner and more. Here are two couples. Let's call them Mr. and Mrs. Jones. They've done everything right and they're living the lifestyle with money, no debt. They can have fun and travel. Why would they ever need to change anything? Do they need to do anything if they have $300,000 sitting in their 401k, the house is paid off, and their children are successful living the lifestyle? What if something were to happen and Mr. or Mrs. Jones need long-term care? Does anyone know what the cost of needing long-term care could be with no coverage? It's very expensive, but many people don't have it. Why would Mr. and Mrs. Jones buy something that's expensive if they don't think they need it? But what if they need it and don't have it? Sounds like a catch-22, right? Do you think that somehow if they did need long-term care someday, it could change their current lifestyle? What do you think? Absolutely. It will change their lifestyle. We can show you how to get long-term care for free. So you can win if you need it, win if you don't, and win if you die. We're not talking about dying in here today, but the TRIP program insures a couple against the loss of 30 to 50% of a spouse's Social Security if they were to die. The leading causes of death are heart disease, cancer, and stroke. What if your paycheck suddenly stopped because you couldn't work due to disability or critical illness? Do the bills still need to be paid? What if you couldn't work for months or even years? Could that change your lifestyle? How many of us are immune to having a medical issue? When should a person think about getting long-term care, or life insurance for that matter? We think it's now because things happen. A lifetime of savings can disappear quickly with medical bills. We're talking about protection for your family and your money and building a solid foundation for your future. The IUL life policy is the only financial product that can offer all these things into one. It's a life policy being used more for savings than life insurance, offering protection, tax advantages, safety, and the growth of your money for retirement. The IUL is the one way where you can have all of these in one. Here's the list of financial products once again. The IUL is the only product that can give you all four of the cornerstones of a solid foundation. How does an IUL work? From here, we want to quickly go into the numbers and the uses of an IUL. We won't be able to give you everything in such short time, but we will be able to follow up with those who are interested. The IUL policy is the fastest growing trend of today. With just one policy, you can cover it all: your family, home, principal, and retirement. The IUL offers stock market-like returns with none of the downside risk. And even though it's a life insurance policy, it's mainly being used for two things: savings, for storing your money away safely and securely for retirement, and creating a tax-free environment. All money stored in an IUL is not taxable as in your typical investments, and your money can be accessed under your control to be used any way you want, without penalty, before or after retirement. The cash value that builds has no possibility of loss of principal and the powerful force of compound interest. Everyone knows that there's a big difference between earning 3% and 8% on your money. Banks today are now offering only 1% interest, while the IUL offers up to 17%. Here's the illustration of the IUL policy. Even though it's not real life, it shows a snapshot of how the money can grow. This illustration uses a conservative rate of around 7% interest, which is below the average. Can anyone predict what the stock market can do tomorrow? What about next year? Rate of return and inflation are not predictable. The only thing we can do is to get ourselves into the best position. This max funded IUL policy example shows the power of its cash growth. If you look to the right, it shows how the money is growing inside of the policy. If you look to the left, it shows the premium being paid by the owner of the policy. Look what happens with the premium payments after the 5th year. It's showing zeros. Do you see all those zeros after the 5th year, all the way down to the 12th year? The owner of this IUL policy will be paying nothing for almost 7 years, while the policy's cash value continues to grow, and they're still covered by permanent life insurance. Here's the strategy being used to pay off your house quicker by using an IUL. There is a much more efficient way to own your home free and clear from what many of us have been taught. This might sound controversial, but it's not the best way to pay off your home by working extra hours full-time to pay extra principal payments or double down on your house mortgage. It's important to know that your house is considered paid off once your cash equals your debt. The cash value building in a life insurance policy should be considered cash, collateral, or property, just like real estate. So, here's the Mortgage Master Move strategy, 5-year plan. Own a max funded IUL policy for the next 5 years, while at the same time you will arrange to pay the interest-only portion of your home for the same 5 years. Let's say you have an $1,100 house note. $700 of that could be interest. This strategy frees up money so you can redirect it in an IUL where the cash grows, so you can own your home free and clear much sooner. Plus, you'll have access to more tax-free money after the 5th year. Do you think this strategy can work for you? Tax-free is the most important part. Again, here is the example illustration of the max-funded IUL. All this money seen on the right is growing tax-free, and you have access to it without penalty. Another strategy being used by an IUL is collateral, where you're in control of your money. The cash value seen here is considered cash, collateral, or property, just like real estate. And banks will loan you money at the absolute lowest possible interest rate. You can see that there's a significant cash value after only 2 to 3 years. Do you see how much cash is in this policy after 3 years? It's $11,401. So if the owner of this policy took their policy to the bank will loan him or her $11,401 with no questions asked at the lowest possible interest rate that they can offer. And it wouldn't affect their policy. An IUL is the only financial product that can do this. And we can show you how to properly fund an IUL policy. Here's the final point. An IUL is also a permanent life policy. There are only 2 types of life insurance, temporary and permanent. The term life policy is temporary. It's the cheapest because it builds no cash value. Term life only offers one benefit, the death benefit. In our opinion, term life is often used the wrong way. Term life should not be used to protect your family, but a specific debt such as your home during a limited time period. It should never be used to protect your family in the case of death due to the uncertainties that can become involved, such as major illness or long-term care needs. Protecting your family is the job of a permanent life policy, such as a whole life or IUL.
Okay, it's obvious that she made very good grades in English. Different story for me. This is not a joke. While I was in college, I was getting C's in English at the exact same time I was getting paid to tutor physics. True story. But we want to close this on a scenario. What about someone who's paying too much in taxes or fees? Does someone who's currently living the lifestyle they want, do they seem to care about paying too much income taxes? Is it real money to them or just numbers sitting on a page? If I gave you some money and you thought it was real, but then you realized it was fake, would that somehow bother you? Even though you might have been happy 30 seconds ago. If I put it in your hand and you thought about spending it, could that upset you? I guess what we're trying to do is making paying extra taxes to the IRS real or tangible, not just numbers sitting on a page. So, what's our mission with you this evening? This workshop is to let you know about what? That there is a way to get a rate of return on your money that can keep up with inflation without losing any money, and it's all being done in a tax-free environment. Let me give you a quick example. Everyone has a cell phone today, but I can remember when I could make a phone call at a phone booth for just 10 cents and talk as long as I want. And then guess what happened? The price went up to 25 cents. And then again to 35 cents. And now, how much does it cost to make a phone call at a phone booth? It's 50 cents. And for how long does a call last for 50 cents? 5 minutes. I can remember when I could buy a dinner platter at a restaurant, say Denny's, as an example, for just $6.50. Now, how much does it cost for the dinner platter at a restaurant? It's around $10.50. How much do you think the same dinner platter will cost 10 years from now with inflation? It'll be more, right? Do you think it'll ever go back down to $6.50? The water bill was $18. Now it's $53. But let me ask you this. Do you think that paying taxes to the IRS will go up or down in the future with the government that's now over $19 trillion in debt? Anytime the government needs money, what do? Taxes. Would you even care how much debt the government was in if you were in a tax-free environment? Would you even care if the market were to crash if you were in an IUL policy where your principal is safe? Here's a couple of facts. The average cost of long-term care is around $76,000 per year in the United States, and it's not being covered by Medicare. Congress has been talking about removing inflation protection from Social Security. Right now, Social Security isn't even keeping up with inflation. But guess what? It's our goal to explain to you how the IUL works, how it can benefit your family, and everything about it, no matter how long it takes. Everyone needs to move at their own pace. It might take some only 30 minutes. It's actually possible for someone to get an IUL right away because of how the stock market has been volatile lately. But for others, it might take some time. It could take longer. How long could it take? It could take days. It could take hours. And we try to set appointments. Is it fair for us to ask you to set an appointment? Could everyone's situation be different? You can set an appointment or fill out the analysis form. And by the way, we won't share your information. Looking back at the form, there's a list of things that we did not cover because they're beyond the scope of this workshop. Some of the things are very important, such as the power of attorney, survival's guide, and we keep them on our checklist. You can check off those boxes if you like because we do provide those services. If you did not like our presentation, do you have to do anything? Were we pushy? Do you feel like, he's going to try to sell me something? Am I chasing you around the room? Is there any pressure? If you don't like it, what can you say? But let's say you do like what we're doing. Does that mean that you have to do everything that we have on our checklist? You can do whatever you want, whatever applies to you. We would like to get to know you, and with your permission, ask you some questions. Get a feel for what your goals are, what you might be trying to accomplish, and also to see if there's anything that we talked about here tonight that could enhance what it is that you're already doing. We hope you liked our presentation. The IUL may not apply to you, but maybe we can talk about other things if you want to. Other strategies. About half the things that we do are at no cost, trying to solve the problems for everyone. Any information that we get is kept private and locked up. So, I know we didn't leave a lot of time for questions. We covered a lot of information. Everyone can decide if this makes sense to them. We don't want anyone to make a rash or hasty decision. You can go home, think about it, maybe look at the videos that we keep on our website and see if you agree with us. The IUL is a multi-step process, and we want to be able to do the things in the right order. Sometimes we might run into a sharp opinion, and we don't want to go backwards if we don't have to. Another thing, I'm trying not to come off as a pushy salesman. I'll need your permission before I show you the next step. Would you rather have things simple or complicated? We hope this is the beginning of a good relationship. We hope you have a good evening. Thanks again for coming.
If you are interested in knowing more, please fill out our analysis form and get it back to us. You can set up your appointment with us in the next 5 business days by checking off the day and time you prefer in the boxes below at the bottom of the form. The Take Care of Your Family form is for you to keep.